Okay, back again with real money trades for my masterclass over at simpleswitch.teachable.com. If you go over there and take my masterclass, it will get you up to speed on what I'm doing with this real money trading series, growing a small account in the futures market and with swing trading. And I chose the futures market to go with this because I don't have to worry about the PDT rule and I can day trade. In my masterclass, I take you from day one, I want to be a trader, then selecting a broker, opening an account, then teaching you how I build winning strategies that fits you. I call it the PLG, personality, lifestyle, and goals. But not just that, strategies that have a proven statistical probability of success. Once we build our strategies, then we build a trade plan to go with those strategies. Two completely different things, traders. You need a good strategy and a good trade plan to be successful. Then I sim trade those strategies. And now we're into the real money trading portion of building a winning strategy. That is what this series is about. I plan on trading these accounts until the end of 2023, and we'll see how far we can grow them in 1 year's time. Now, I don't know if these strategies are going to be successful. We're going to find this out together. And if they're not, hopefully I can tweak them along the way to make them successful. I started my futures account with $1,700 because that was the bare minimum I felt like I could start with. And then I started my swing trading account with $2,000. Again, I felt that was the bare minimum I can start with. In my masterclass, I explain all these details on why I make the decisions, what you're seeing on the screens, the charts that you're seeing, all the tools, all that stuff. This class can benefit beginner traders and pro traders alike. I do trade with my algorithm, but you don't need that in order to benefit from my masterclass. You can trade with whatever tool it is for you. If you're thinking about taking somebody else's class, my masterclass can help you choose what other strategy might be right for you. This way, if you're going to spend a lot of money to buy somebody else's strategy, it would really be good if that strategy would fit you. And I teach you all about that in my masterclass, so go check it out. But for now, let's get into today's video. Okay, so here we are on day one of real money trading. So we got our $4,000, but I'm not using the full thing. I'm just using a portion of it. I only need $1,700 to start my futures account. And then I really only need $2,000 to start my my swing trading. And the way I see it is if I can't make money with the bare bone minimums, then I'm not going to make money if I have a lot of money in the account. So I'm starting out small. I need to prove to myself that I can make money first. When I can double these accounts, then we can talk about what kind of account I really want to have. But right now I need to prove to myself that I can actually make money. So, putting 50,000 in here is not going to help me make money. It's actually going to make it worse. So anyway, so here we are. So we're going to go down to the swing account with $2,000. So we started with right now, year-to-date P&L, $218. That's right, everybody. I know this is video one, but we already got $218 if the trades we have right now are successful. So let's go over to the trade log and show you what I'm talking about. Let's scoot on over there, swing. So here we are. Here's the 4 trades that we're in right now, and I'm going to show you those charts so you can see that I got in them, that they're still active and all that good stuff. So PBF, HAE, VOC, and XOM. So keep in mind the date, 10/4/2022. Right now there's a war going on with Russia. We're coming out of a pandemic. We're going into a winter. They're blowing up pipelines, like all kinds of crazy stuff's happening in the world. So oil and energy and all that stuff is, it's pretty sensitive right now and volatile, I should say. So these are all energy tickers, which I don't usually like to give myself that much exposure in one sector. HAE is not, it's medical. So I broke it up with some medical in there, again, coming out of a pandemic and having new problems showing up. So right now we got a little bit heavy in the energy sector, but I think it's warranted for the current conditions that are taking place in the world. So there you go. So you can see what we did. So we ended up, there's our position sizing that we're in on each thing. I'm risking, 470 on this one. I have the potential to make, I'm risking $5.37 per share. I have the potential to make 470. So it's a little bit uneven, and I'll show you why when we get in there. We're better here. 133 is what our potential gain is per share, and $1.09 is what I'm risking. So that's nice. And then definitely lopsided here. 786 is what I'm risking to make 564 per share. Not how I like to do it, but I'm going to show you why that ended up that way. All right, so let's go look at the chart real quick, and then we'll come back to the log and tell you how I came to these numbers. Why did I buy 11? Why did I buy 9? Why 55? And stuff like that. Okay, so let's start with XOM. So right now you can see we're breaking through the target on XOM. So we're going to go. I'm going to go ahead and put a stop in for XOM on the deal. So I'm going to try to let this thing run and squeeze more out. I think this thing's really going to boost, but this is the target. So I have to put my stop in at the target, and then if it wants to keep on going, that'll be awesome. And then I can go ahead and trail a stop after that. But I need to at least hit my target. So I put my stop in for XOM since we just got through the target area. So pretty awesome. This trade's moving quick. So here we go. So here's the algo, right? I trade off my algo. You all can trade off of whatever it is that works for you. As I teach in my master class, it's not about my algo. It's about having something to trade against. So for me, my algo is what I trade against. And the thing you trade against is what gives you your probabilities. So with my algo, I can say that I have an 80% or 90% or whatever it is probability. And if you have something solid to trade against, maybe it's the RSI or maybe, I don't know, whatever it is that you're using, some candlestick pattern or something, you can go back, look at your probabilities and then know what you're dealing with and then trade against that. So right now, here's my algo, red to green and modified red light, green light strategy, telling me that I need to get in at the open of this candle right here. And then I mark up my chart based on my algo. And again, you can have your thing that it is that you use to trade against. And then that tells me that my target is here and my stop is here. And by putting my target here and my stop here, my probability of success with this ticker is XYZ. So, 80%, 90%, whatever that is. So I'm going to go ahead and just show you real quick and zoom out on this chart a little bit. So we can look and see what XOM has been doing for me the last couple years. Not a lot of trades. Let's see here. XOM, what are we at? Time access, 1 year. Let's go back a couple years. Apply. All right. Just double check that. We go back a couple years. Yeah, 2 years. Go back 3 years even. Whatever. Okay. So here we are. So XOM, this is what it's been doing the last couple years. So all these winners, a little series of losers. And if I go back 3 years, it's much better because I don't have this cluster of losers. We have a whole bunch of winners. So that cluster kind of hurt. And then now we have all this series of winners. And we had a loser. And then we jumped into the trade after a loser, which the probability is much higher of success after that loser. So anyway, so there we go. So we got our trip, basically our trigger to get in, jumped in, and now we are on our way to the target right there. So you can see this yellow line. This is where I end up getting in at, and this is why the trade's lopsided, because it was supposed to get in here at 91, not at 93. But unfortunately, I came home late, and I went to check and saw that this had triggered the trade, but it was too late to get in. Or after market's already closed and everything. So I just had to wait till the next day, and unfortunately the next day it gapped up. So then the choice is, do I get in the trade or do I just sit out on the sideline and say, I missed the entry? But I didn't want to do that because this is the energy sector, and the energy sector is so hot right now. There's a lot of stuff in the news. So I was like, I'll just jump in anyway, even though my risk reward is a little bit off, and hope that maybe I could squeeze some more out. Although we are pulling back a little bit now. So we'll see. We may end up getting stopped out here and taking our profit. All good, though. We hit our target, first trade in, or first series of trades in, and we got our winner. So right now I'm trying to keep my account at less than 10 or 10% exposure in the market or less in that area. So it's great, and then you're going to see how this affects the scaling ladders and all that good stuff here in a minute. All right, so that's our first trade. So let's go over to the next one. VOC, so same thing, red light, green light. We got full permission down here. And again, all my strategy and algo and how all that stuff works is over at simpleswitch.teachable.com. So here we are. So, and again, all my trading education over there is free. And why is it free over there? How could you just why would you spend all your time to give away free education and all that stuff? Well, I think it's important to give back and help. But at the same time, I also have my tools over there that I trade with. So, and those tools are easy to copy. I mean, you can make your own if you want to. And for those who don't want to make their own, maybe they purchase my tools and maybe I make a little extra money on the side for the time I spent to put that stuff on the site. Especially if you get value out of the stuff that's over there, maybe you buy something as a way of giving me a tip, if you will, for spending the time and effort to put that education out there for you all. So it's not like I'm not getting anything out of it. I can get a little bit out of it, but the bigger thing is I have friends and family that want to learn the trade, and it's instead of trying to sit down at the computer with them and all that stuff and hope they remember what I said, or that oh, you didn't tell me that, or whatever, just all that kind of stuff. I was like, I'm just going to make a class, and then I can give that to them, and then everything is there. They can't say I didn't tell them because it's in the class. If they didn't take that full class or they skip something, that's on them. and I can give them all that education over there. So I did that for them, and then also it's for my kids later, they'll have it to learn the trade and all that stuff. If for whatever reason dad can't teach them, because how it is if you're a parent to try to teach your kids, I can direct them to a class and they can learn it that way, and it's not dad actually sitting next to them. So there's a bunch of benefits for me to do it, and so I started to do it for that purpose. And I was like, if I'm already going to put it up there for friends and family, I might as well put it out there for the public. And if I'm going to put it out there for the public, I might as well put some of my tools on there. And if anybody wants to buy them, maybe I make a little extra cash on the side. So that's kind of how that went. But anyway, so here we are. So VOC, this was the ideal entry. I did not get the ideal entry, again, because by the time I saw these things trigger, and it was too late for me to jump in. So I jumped in when the next available time for me to get in was. So yes, I'm getting in way late on this trade. But here's the thing with VOC. Let's zoom out again. I feel strongly that we're going to retest this 886 area. We're coming into wintertime. There's the news, the fundamentals behind VOC look fantastic for VOC. Like, it's probably going to blow way higher than this. So right now you can see my target is up here. I put my actual sell target over here, so my risk reward ratio is actually equal or better than, I have better reward based on risk. But that's adding fundamentals into the trade. What I teach over at Simple Switch is strictly based on technical trading. Fundamentals is a lot more subjective and a lot more difficult. I think that's something that traders need to have a lot of experience in the market before you really get into trying to understand fundamentals, because it's a massive amount of information to be able to understand how to really trade fundamentals. It's not like just look at the news or look what's going on with the CEOs, or it's way bigger than that. So, but based on fundamentals, I think that we're going to see a move higher than that high. So what I've done is I've moved my target up here, so just in case I'm not available around the computer, I can take advantage of getting that target. And then at the same time, I put in an alert in here. See Mark right here. So with Thinkorswim, I can put alerts, and it'll text my phone when the ticker gets to this price. So once that happens, I'm going to do the same thing with this as I did with XOM. And I'm going to put my stop in once it gets through here a little bit. And then if it backs up and I get out, I get out. It is what it is. I have to trade based on the probabilities here, based on what I'm trading against, my algo. But if it does keep on running, then I want to be able to give it a chance to do that. And then I'll be trailing my stop, but looking for a target up here. So I'm not putting my target price, my exit price, which right here, my limit order here. I'm not putting my limit order up here because I don't have a statistical proven probability of success that it's going to get there. And I want to base all my trades on a statistical proven probability of success. It's the only way I can make money in the market. The absolute only way. I have to have that. But fundamentals are telling me it's going to get higher than this. But I don't have a statistical proven probability of success to go with those fundamentals. So the way I do it then is I say, okay, well, fundamentals are saying this looks like it's going higher. So I'm going to not get stopped out right at my target, or tagged out on my limit order on my target. I'm going to give it a chance to run, put my order in, and then look for it to get to that higher level. But I'm going to capture at least my minimum profit, which is my 1-to-1 profit based on statistics, right? So I'm trading on statistics. I see the fundamentals say it could go higher. So I want to give it a little room to breathe so I can put my stop in here and then allow it to go where the fundamentals are saying it's most likely going to go. And if it doesn't, it's okay. I can get out and move on to the next trade, wait for another setup. Because it doesn't always go straight up. It may go up, come down, trigger another setup, and then go there, right? So I still might be able to take advantage of more trades. But that's why I've done what I've done. Okay, so that's VOC, XOM we looked at, PBF, the next energy one. So right here is the target. I did the same thing because fundamentals look like we're going to be going for a run higher. But I do have my alert in when I get to the target so that I can then move my stop up to that target. And then, if it backs up, I get stopped out. I'll move my limit order up to where I want it to be, up above 44. But I'll have my stop in at least at the target. So right now we got 3 trades in, and 3 look like they're going to be winners. Again, I got in late on same story, right, with PBF, but all good. So then let's go look at our non-oil trade. And then we're going to go back to the trade log. I'm going to show you how I came to the conclusion of the numbers I chose. Like, why did I buy those share sizes? Okay, so let's, where are we? HAE. All right, HAE. So here we are. Nice uptrend, right? So let's do this. let's go back and look at HAE. Let me zoom out a little bit. So HAE, we got a loser back here, but you know, it provides a lot of winners. And this going back a couple years, I think. Let's double check. Time axis, yeah, it's going back a couple years. So it provides a lot of winners. We got that one loser in there. So we're on a big win streak, which makes things nervous with HAE. So the thing is, we did actually have a loser right here. So let's go ahead and duplicate, and then I'll change the color. So we did have a losing trade that was right here. Edit red. So we're getting in after a loser. So right here was a losing trade. This was the trade. It came back. It's a loser. Market structure, though, you know, gave some ability to get more out of it there. And then this is the current trade right here. So I'm going to mark this up. Right there is the current ideal trade for HAE, and that's the trade that we're basically in right now. So where do we get in? Let me mark the entry in HAE. So we are in at 78.06. So now I'm going to take my little tool here, the $ on it, 78.06. I can just put this anywhere on here, then right click on it, edit properties, and then put the number in, and it'll automatically go to that spot, 78.06. Okay. So here's our entry right here. So we got in, and now it's sold off a little bit. Got a little bit on the high side there. But all good. Sold off a little bit, and that's fine. I mean, we have a really nice uptrend here. Our stop is down here. So I put my stop, though. I moved it down below this market structure area. So if it wants to come back down and break that, then it's probably going to fill the gap, retest this support area, and then who knows where it goes from there. But if that happens, I'll be out and waiting for the next trade to set up. And we just came off a loser, so chances are this is going to be a winner. High probability, right? Really high probability that this will be a winning trade. So, and then I have a feeling this is going to go much higher. So I'm going to move this up a little bit here. Yep, I said feeling. So, and again, based on fundamentals, based on the uptrend, based on a lot of stuff. So, but what I am going to do is I move my target up there so it doesn't just get tagged out when I'm not paying attention. And then I'm going to go ahead and right click, create an alert, at or above, create. So now it's going to text me when it gets here so that I can then go into my phone or wherever I'm at and move my stop up to that level and then lock in that trade and possibly squeeze some more out of it. So that's what's going on with HAE. So let me go and show you now how I came to those numbers. Why do I have the shares that I have? So back to the My Strategy Manager. So right now you heard that noise. So let's go back over and see what just happened. So it looks like we got stopped out of XOM. Yep, XOM backed up, so we are now out of XOM. So we're gonna go ahead and put that trade into the trade log and put those numbers in. I'll look at my dashboard. Filled orders. Okay, so XOM 98.74 is what we got out at. So let's go ahead and make an adjustment there. So this does hurt me a little bit, I'll tell you, emotionally wise, because right now I'm like, oh, it's gonna go higher, I should stay in. Like, I'm getting the FOMO, like the FOMO's calling me right now in XOM to stay in. This is ExxonMobil, but the statistical probability of proving, you know, all that stuff that has to be there. And I just got to look at the numbers game, and then I'm like, oh man, I'm FOMOing hard right now. I really want to stay in XOM. So, but I got out. I should get back in. I should get back in with, you know, max out my account, all this stuff, trade on margin, everything, right? So, and I am trading on margin right now, but I'm not doing my risk off of margin. I'm trading off of margin for the buying power to be able to hold all 4 of these, but not the risk, and I'll show you that in a second. All right, so let's go over here. So scaling ladders, again, and go over all this in my class, my master class. I highlighted this in blue to make it easy for you to see which one we're on with the sim account or the swing account. Sim account. We were just in the sim trading. Today's the first day of real trading. Sim trading went awesome, so now we're able to move over to real trading. So here we are. And again, for those of you who are, you know, just watching my videos for the first time or even haven't been here in a while, trading is very risky. My results are not typical. You know, it's very easy for traders to lose their money. You know, trading is very what do you call it? It's very speculative. You know, you're looking at the past to try to decide what's going to happen in the future. And just because it happened in the past doesn't mean it will happen in the future. Everything could change the day you start trading with real money. You could lose all of it. So really high risk. I try to recommend that if you are going to trade with real money, it's money you don't need, like fireworks money. You're going to burn it anyway. And to definitely trade in the sim for a very long time, 6 months, a year, 2 years, whatever it takes to be successful. Like sim everything first. Make sure you're able to be very successful, and for a very long period of time. You didn't just get lucky for a few weeks. That's why I say sim for 6 months to a year at least. And then if you want to go into real money, you can think about it. But again, you could lose all your money. So that's why I started my account really small. If I'm not going to make it with a little bit of money, I'm not going to make it with a lot of bit of money. So here we are in our swing account. So $2,000 is my starting balance in my account. My max risk is 10%, not per trade, but combined total of 10%. So my group of trades I'm in right now, if all of them hit, I'll earn 10% pretty much in my account. I've chosen to only trade this number of stocks. So I based my percentage on that, and I'll show you in a second. So here's my scaling ladder. So if this group is successful and I earn that 10% or better, then I'm looking at $200 roughly that I'll make. So the next group of tickers that I trade, if I earn that 10% or better, or even if it's, the next one I trade is a winner, whatever. But as the account grows by 10%, then that allows me to scale up how much I'm risking. So right now I can only risk $200 because that's what 10% is, right? The next 10% is 220, 240, boom, boom, boom. So we look at the scaling ladder. Each one of these blocks is 10 trades. So right here after these, or 10, 10 times the 10 percentage. So is that 10? I'm not going to go 10% on one ticker. So that'll always be divided over a group of tickers. So I'm just going to say groups, and I'll do most of my swing trades in groups. Pretty much always have 4 to 10 tickers out at one time. So here we are. So like the XOM just finished. So I'm going to go look for another trade to go plug into that spot. So here we are. So, or maybe even 2 and divide it up, the percentage that's available. So once I get these 10 done, then I can look at this next group of 10. And it's like, oh, now I'm risking $1,000 a trade. Oh, that's pretty good. Now I'm risking $3,000 a trade when I get to the bottom of that group, and then $8,000 a trade when I get to the bottom of that group. $21,000 a trade when I get to that group. What? Wait, that means I got $234,000 in my account? So I can look at my scaling ladder and say, wow, I get done with that 10, that 10, that 10. Now I'm like at $90,000 in my account. Now I'm at $234,000 in my account. I just got to stick with the proven statistical probability of success, trade my plan, and as long as I trade my plan and monitor my plan and make adjustments as needed, this is the potential, not the guarantee, the potential. So you know what? I don't need to stay in Exxon Mobil. Even though it looks like it's going to run, let that money be for somebody else. I just need to stick to my plan, because my plan says that in 10, 20, 30, and of course I'm going to have losers in here, right? So it'll be more. 10, 20, 30, 40 roughly. 1, 2, 3, 4, 50, 50 groups of trades, and then account for some losers, so maybe 60 groups of trades. Even if this takes a year or 2 years, I'm looking at $234,000. Like, I'm quitting my job. Trading becomes full-time gig for me, because every box after that, I'm doing $600,000. So $600,000, I can easily, leave $200,000 in my account or $300,000 in my account and pull, $400,000 a year once I get there. So even if this takes me 3 years to get there and I'm making $400,000 a year to work a few minutes a day, are you kidding me? All right, so I don't need to be in ExxonMobil. I'm good. I need to stick to my plan, because if I do stay in ExxonMobil and I don't have a proven statistical probability of success and I take a loss, that's going to set me back in my plan to be able to retire and just trade for a living. So I don't want to do that. I need to stay focused. So the scaling ladders help me stay focused. I just got to come over and look at them. But that also tells you why when we go to this next piece here, that $200 is what I'm risking rewarding, because at a total with the group of trades I'm in, because of the 10%. So now how do I do that? How do I make those calculations? In my strategy manager, I have custom calculators. So if I go into the custom calculator, right now I put in my buying power based on margin of $8,000, but that's not what I'm basing my trade risk off of. Right here, $2,000 is my account. I'm risking 3% on each one of these tickers. I have 4 tickers out, so I'm a little over my 10% right now. I'm at 12%. But with the oil or the energy sector right now, what's going on, I think it's totally valid to have that little additional risk. So that lets me know what I can do. So then I put my tickers in here. I put my risk on each trade, what I potentially could lose on each trade in there, so I can kind of see what's going on. So if I come over to this calculator here, calculator 2, so there's different calculators, so you can use them in different ways. I'm just kind of giving you the rundown. So over here I put in my 3% risk on my $2,000 account. So basically $60 per trade is what I'm risking in order to be able to be within 3% of 2,000. All right, so VOC cost $727 with my $2,000 in buying power, which really I'm looking at $8,000 in buying power, right? Because of margin. I can afford 1,000 shares. I can afford 1,000 shares if I put my whole account on just this one ticker, right? Over here we have a group. With a grouping of tickers over here, it kind of shows me that once I put all these numbers in, the most I can do is buy 37 shares of each one. On calculator 2, we have it also here for the group as well. So once I put all these in, so this is if I just use all my buying power for this one ticker, this is what I can afford on each one of these, right? After I put the dollars in how much they cost. And then I put the risk in over here. So I'm risking $1 per share, $6, $7, $5 per share. So it's telling me that if I don't want to risk more than $60 in any one of these trades, that I shouldn't buy more than 55 shares, 9 shares, 7 shares, 11 shares. So not that I might buy 55 shares and end up losing $100, but at least it gives me an idea of the ballpark I'm in, because stocks gap up, they gap down, like crazy things happen, they move fast, whatever. So, but at least I get a general idea so I can be in the range I want to be in. If I buy all 4 of these tickers, I can't average more than 37 shares per ticker, or I'm going to exceed my buying power. So then what I do is I go and I look at this and say, well, I'm only going to buy 9 of this. So how many shares do I have left available that I can roll in at something else? I'm going to buy 7 of this. How many shares do I have left to roll over? 11 of this. How many shares do I have left to roll over? Can I afford to buy the 55 shares even though it exceeds the 37? Yes, I can, because clearly I have enough rollover to buy those 55 shares. That's how I know I can buy all the shares that I need to buy and not exceed my buying power. But also, I'm looking at my risk here of 3%. I don't want to lose more. So $60 is saying don't lose more than $60 because that's 3%. So I put that in the max risk. So that's why it's telling me 55, 9, 7, and 11. So I'm not going to exceed my risk profile based on my risk management, my scaling ladders, and all that stuff. So I am a tiny bit because I'm going to 12% right now instead of 10, but that's how I come up with these numbers. So that tells me I can buy these numbers. So that's why over at, now we go back to the log, I ended up purchasing those number of shares. Hopefully you understand that. And as I'm doing more of these videos, I'll try to, actually go through this process live or recorded, seeing the ticker become available to trade, putting it in and doing all that stuff. I'll do that on the next, I'll try to get that in, on the next series of videos. As soon as possible, I'll try to get that in. And that will help a little bit as well. So now that I'm in the log and I put all these things in, I put in the strategy that I'm using here, because it's not going to show you right now, but over here is my statistics. So this is going to track what's happening per ticker and per strategy and overall what I'm doing in trading. So I'm going to be able to see which combination of things is providing me my best returns. And I can see if a particular strategy isn't doing so great, and then I can drop it, right? So, or maybe one's doing better than others, so I can focus on it and stuff like that. So far, if all these trades hit, we got $219 is what we're looking at in profits. Right now, we got one of them that's sold in profit, and we'll see if the other ones do as well. So the other thing I can do now, so on this trade log over here, jump to date. Thank you, Mark, for putting that in there for me. He's a friend of mine who programmed that part for me. This thing took forever to make, by the way. But anyway, so what do we just close out? XOM is closed. So in my notes, I can put open, just so I know that these are still open trades. And I could put, if I went heavier or less or what, and all. So I could put whatever notes I want in here, so that later on when I reflect on what happened with my account, remember what happened there. So anyway, so that's where we're at. So I'm going to go ahead and go over to dashboard again. So dashboard, so yeah, so 17.2, and that's why we got that $219 in there if we have potential winners. And then we're in the month of October, so this year is almost over, and then we'll start a new year. But yeah, so October can look pretty nice if all works out. If all works out good. So there we are with ExxonMobil. It's probably going to boost higher without me, but all good. All good. I got to stick to the plan. All right, everybody. So that's day one down on swing trading. So let's go look at the futures market real quick because that was the other thing we're doing. No trade there, but I'll show you why. And let's look at that real fast. Okay, so here we are with the MES or the ES. ES, MES is the same. We'll just look at the MES. MES. They're basically the same, just a different financial structure of what you profit or lose per trade, and how much money it costs to buy and stuff like that. But it's the same exact data, same thing basically that you're looking at. So S&P 500 is basically what the futures ES or MES is. It goes off the S&P 500. So here we are. So with Sniper is what we're trading with. It's a 4-hour candle. Because of the personality, lifestyle, and goals, we don't have that much time to be able to really trade. So we're saying that we're working, full-time job plus dad plus. So I only have a few minutes a day to really spend trading. So the 4-hour candle works out perfect. So here we are with Sniper, which trades on the 4-hour. And again, you can use whatever it is that you use to trade against. This is just what I use. I use my algo. And you can get my algo if you're interested in having my algo to trade against instead of what you're using over at simpleswitch.teachable.com. But here we are. So this was the entry right here. So I'm going to go ahead and mark it up. This was the entry right here. Unfortunately, I did not. I checked it, knew that this was coming, and missed the setup. So I wasn't able to get into this trade. So right now we're just waiting for another setup. When I go back, it's not on this chart. When I go back, there's a lot of winners leading up to this. So I think now I'm going to wait for a loser before I get in, so I can get in on a very high probability. There might be 20 winners in a row, and I've missed out on 20 winners to wait for a loser to get in with higher probability. But it's my first trade out, and I don't have a lot of money in my account. So because I don't have a lot of money in this account, my first trade out of the gate really needs to be a winner. I mean, with this volatility, these moves are huge. So we're looking at a 45-point move here at $5 per dollar, basically 46-point move. So yeah, that we're looking at a couple $100 right there. And if I lose $200, I blow up my account. So if I jumped into this trade, which I would have did for sure, because there was definitely an overdue for a bounce, then that would have meant if it was a loser, I would have already blown up my account first trade out of the gate. I had to refund it to keep going. So right now I really need to have that first trade a winner to be able to provide me a buffer. So I want to take a highest probability trade, which is going to be after a loser. Doesn't mean it'll still be a winner. I mean, there's no guarantees in the market. Actually, there is. There's one guarantee when you're trading the markets, and that is you will have losses. You're definitely going to have losses. You're going to have debits come out of your account for sure. That's the only guarantee. So, but I do need to have the highest probability. So I'm going to wait for a loser to set up over here, and then I'll end up taking that trade and get this count started. So the futures account has not started yet. We're waiting for that optimal trade, and then we'll get in. So anyway, so that's where we're at, everybody. We'll see you on the next video. Video 1 down in the can. So far off to a good start. And then we're going to go look for a trade now to fill that XOM that just finished. So we can always keep trades in. I want to try to keep trades constantly. I don't want to go without, if I got 2% available to put on the table, I want to put it on the table. So I'm going to go look for that, and we'll put that into our next video. All right, everybody. See you on the next video.